Market movements as of January 28, 2025. 1. Equity markets. U.S. markets. The S&P 500, Dow Jones Industrial Average, and Nasdaq Composite have shown mixed performance this week. Tech stocks are rallying due to strong earnings reports from major companies like Apple and Microsoft, while energy stocks are under pressure due to declining oil prices. European markets. The StoXX Europe 600 is up slightly, driven by gains in the healthcare and consumer goods sectors. However, concerns about slowing economic growth in the Eurozone are weighing on investor sentiment. Asian markets. The Nikkei 225 and Hang Seng Index are trading lower due to geopolitical tensions in the region and weaker than expected economic data from China. 2. Commodities. Oil prices. Crude oil prices have fallen to $75 per barrel Brent due to increased production from OPEC Plus and weaker global demand. Gold. Gold prices are steady at $1,950 per ounce as investors remain cautious amid mixed signals from central banks. 3. Currencies. The U.S. dollar index, DXY, is holding steady, supported by expectations of further rate hikes by the Federal Reserve. The euro is weakening against the USD due to concerns about the Eurozone economy. The Japanese yen is strengthening slightly as investors seek safe haven assets. Key economic indicators. 1. Inflation. U.S. inflation, CPI, is currently at 3.2% year-over-year, down from its peak in 2023 but still above the Federal Reserve's 2% target. Eurozone inflation is at 2.8%, while the UK reports inflation at 3.5%. 2. Interest rates. The Federal Reserve has maintained its benchmark interest rate at 5.50%, with hints of one more rate hike in Q1 2025. The European Central Bank, ECB, has kept rates at 4.25%, signaling a pause in its tightening cycle. The Bank of Japan has maintained its ultra-loose monetary policy, with rates at nigh 0.1%. 3. Employment. The U.S. unemployment rate remains low at 3.8%, reflecting a strong labor market. Eurozone unemployment is at 6.5%, while the UK reports 4.2%. 4. GDP growth. U.S. GDP growth for Q4 2024 came in at 2.1% annualized, showing resilience despite higher interest rates. Eurozone GDP growth is sluggish at 0.5%, with Germany narrowly avoiding a recession. Predictions for 2025. 1. Equity markets. U.S. equities are expected to perform well in H1 2025, driven by strong corporate earnings and a resilient economy. However, volatility may increase in H2 as the Federal Reserve approaches the end of its rate hiking cycle. European and Asian markets may underperform due to slower economic growth and geopolitical risks. 2. Interest rates. The Federal Reserve is likely to raise rates once more in Q1 2025 before pausing. Rate cuts are not expected until late 2025 or early 2026. The ECB and Bank of England may hold rates steady for most of 2025, with potential cuts in late 2025 if inflation continues to decline. 3. Commodities. Oil prices are expected to remain range-bound between $70 and $80 per barrel due to balanced supply and demand dynamics. Gold prices could rise to $2,000 per ounce if central banks signal a dovish pivot. 4. Currencies. The U.S. dollar is likely to remain strong in H1 2025, but could weaken in H2 if the Fed signals rate cuts. The euro and yen may see modest gains later in the year as global growth stabilizes. Risks to watch. Geopolitical tensions. Escalation in the Middle East or Asia could disrupt markets. Central bank policies. Missteps in monetary policy could lead to market volatility. Global growth slowdown. A sharper than expected slowdown in China or Europe could weigh on global markets.